Gold has been extremely popular investments for thousands of years, but it's not all that glitters. The price of copper, one of the world's most versatile metals, has been on a tear since the pandemic began, hitting a decade high of $10,000 per metric ton in May. Prices fluctuated recently on news that China would try to slow the current widespread commodity surge, creating an opportunity for investors to buy into a metal that's likely to remain in high demand. So, what is so great about copper? Let's dig a little deeper. This metal places third after gold and silver for jewelers, but tops the list for builders and engineers. It's durable, malleable, and conducts heat and electricity extremely well. You'll find copper in industrial machinery, in your home's electrical wiring and plumbing, and on the bottoms of your pots and pans. Its uses are so widespread that the base metal is often called Dr. Copper for its ability to diagnose the overall health of the economy. And with recovery from the pandemic well underway, the price of copper is once again along for the ride. But while the global recovery is one factor making copper more appealing, a number of major projects and trends are expected to continue ramping up demand. As the U.S. pushes forward with plans for massive infrastructure improvements aimed at fixing its ailing highways and bridges and upgrading airports and transit systems, expect copper to play a major role in any construction projects. Even more good news for resource-rich Canada and other similar countries comes from copper's key role in the switch to electric cars and sustainable energy. Electric vehicles require 2 to 4 times more copper than their petrol-powered counterparts. BNN Bloomberg Resources commentator Andrew Bell notes copper is up 30% this year, with recent trading levels putting this metal near its 2011 record high. So how do you invest in copper? Don't worry, we've got you covered. Investors have a few different ways to put their money into copper. Here are 4 of them. Bullion. Investors can buy just any metal in the form of coin or bars to save and later sell. But if you're looking to make a large investment, storage space will become an issue. ETFs, commodity exchange traded funds, ETFs, offer a simpler way to gain exposure without having to directly own the commodity. Some commodity ETFs let you zero in on a single commodity, while others group them together for broad-based exposure. For example, the Invesco DB Commodity Index Tracking Fund tracks 14 heavily traded commodities, copper included. ETFs typically have very low management fees, and you save even more by buying them through a zero-commission investing app. Stocks. Another option is to invest in a specific copper mining company. Keep in mind the performance of the stock won't perfectly match that of copper because of business factors like the company's financials, quality of its management team, and long-term production prospects. As with ETFs, you can easily invest in commodity stocks through any number of investing apps. Futures. Investors can use futures contracts to bet on how a particular commodity price will move. Futures involve agreeing to buy or sell a given commodity at a predetermined price and time in the future. While you can trade copper futures on exchanges like the COMEX and London Metal Exchange, assuming you have a brokerage account that offers it, novice investors should be extremely cautious due to the volatility of most commodity prices. Are there any risks involved? Investing in copper isn't for everyone. Commodities are generally susceptible to big swings in value, and copper may be more susceptible than most. Chile, Peru, and China collectively account for nearly half the world's mining output of copper, and Chile alone represents more than a quarter. Government policies, labor disputes, and other forms of local disruption can all have an oversized impact. Moreover, while potentially harmful effects on everything from electric vehicle production to the deployment of renewables, there isn't enough copper to go around, not with construction companies competing with auto manufacturers and producers of semiconductor wiring for the same limited supply. Copper supplies can't keep pace with fast-growing demand, largely because there are few major copper mines in development and many existing mines are nearing peak capacity. Recycling can't meet all of the copper needed for the burgeoning demands of industrial production. A new report from the International Energy Agency on the mineral foundations of the energy transition warns copper demand could double by 2040. Copper is the irreplaceable arteries and veins of an electrified, low-carbon future. For example, an EV battery contains 90 pounds of copper, and a single wind turbine requires 8,000 pounds of copper. Not only is domestic production insufficient to meet the growth in future demand for copper, The world's major producers, Chile, Peru, and China, are struggling to meet the scale of the challenge. Skyrocketing demand for copper is emblematic of what's happening with other metals and minerals essential to advanced energy technologies. The same report from the IEA projects global lithium demand from EVs to jump 40-fold by 2040. Demand for graphite, nickel, and cobalt could jump by 20-fold or more. What do you think about copper? Are you going to invest? Or does the forecast seem a little too far-fetched to you? Tell us in the comments below, and if you enjoyed this video, don't forget to like and subscribe for more.